Our final session is a panel discussion on Desi chickpeas. This is going to be moderated by the Australian Grain Exports Private Limited, from the Australian Grain Exports Private Limited, Mr. William Alexander. Mr. Alexander has a PPT. First, of course, we're going to play that PPT. Then on the panel, we have Pradeep Jindal, Managing Director, Jindal Overseas Corporation, New Delhi. Mr. Gaurav Bagdai, GP Agri Brokers, Rajkot, India. Peter Wilson, CEO, Australia Milling Group, Australia. May I please request Mr. William Alexander, Mr. Pradeep Jindal, Mr. Gaurav Bagdai, and Mr. Peter Wilson to please be seated. May I request our panelists to please join up, Mr. Jindal, Mr. Bagdai, and Mr. Wilson. In case you're taking time, I'd request Mr. Alexander to please start. Thank you. Over to you, Mr. Alexander. Can we set the timer, please? It's still...
Any sign of Mr. Wilson? Well, hopefully Peter turns up soon. We'll just get going. Welcome to the Desi chickpea panel. I'm very happy to be here with my panel of two. Hopefully the panel increases to three quite soon. Oops. So I'm going to quickly go through what's happened in Australia in the last couple of years, just to give us a bit of background before we go into what's happening now. Obviously, the Desi chickpea market is a very important one for everyone, for Australia and India, and the relationship between the two countries is very important, especially for this particular commodity. Going back to 2016, we all know it was the year of the pulse, and in the case of Australia, it definitely was. We had record-breaking pulse crops, not only chickpeas, but lentils and faba beans as well, which in turn means we had record-breaking exports. So all round, it was a fantastic year, 2016 and 17. We would have exported more pulses in that year than probably any year prior to that, so it was great timing as far as the year of the pulses go. Unfortunately, as in trading happens, that things go up and things come down and things go around in circles. So after 2016-17, then we had 2017-18 happening, which, as you're probably all aware, has not been so exciting for anyone, especially the Desi chickpea market. Here I've just got some quick figures. Back in 2013-14, we produced approximately 600,000 tonnes of Desi chickpeas, and approximately the same again the year after in 14-15. And you can see straight away in 16-17, we pretty much doubled our chickpea crop, and then in 17-18, doubled it again. Sorry, that's actually just realised that's not quite right. You've got to take those back a year. So 12-13 would be 1,600,000, 13-14, 600, 14-15, 1.2, and then 16-17 was 2.4 million, which is far and above the biggest chickpea crop we've ever had. This current year, we think probably around 900,000 tonnes. So even though that seems like a huge tonnage compared to the year before, much lower, the acreage last year was a bit down, and then we had some very dry weather, and the acreage was again reduced further. But what it really boiled down to, the difference between those 2 years was our yields. So our yields in 16-17 were far, far better than our yields in 17-18. Now here you see, I'm just putting up the exports from 16-17, which is our enormous 2.4 million crop. And you can see India imported 1.5 million tonnes of chickpeas from Australia. Pakistan imported 500,000, 500,000 tonnes. Bangladesh 200,000, and then Dubai or the United Emirates at 90,000 tonnes. So you can see that's an enormous amount for India to import for that year, and I think this is part of the issues that we're having now, is that they imported so much in 16-17 that that's flowed in to the year after, to what's happening now. And again, just a bit of a chart here. This shows you the demand from India and how it spikes throughout the years. So you can see the November-December imports are extremely high, and that's all due to India importing in those months. And then you can see the whole way through 16-17, you can see massive exports from Australia every month. until you're reaching December 2017, and you can see that particular month, December just gone, is so much smaller, and again, that's all based around India and the introduction of tariffs, and that's put a big dampener on the amount of exports from Australia to India. So like I said, the chickpea market suffered with initial dry weather, which reduced our acreage, and then we had late rain on a lot of the crop, which damaged it and reduced the quality. So overall, it's going to be less than 1 million tonnes that we had this season. And like I said, the demand has significantly dropped off. From here on in, we may have a few 100,000 tonnes left, maybe 200 or 300. And with India out of the market, we're hoping that Bangladesh and Pakistan may step up now and take the rest of our crop before we hit new crop in October. We saw a slide in the market back in November as India kept buying, they kept buying old crop. And then after they'd bought that 1.5 million, we saw that market, that bubble burst. Those prices started to fall at the same time as our harvest. And then when India introduced the tariffs in December, that further pushed the market down. And unfortunately, due to that whole bearish market and prices dropping drastically and prices falling, it created a lot of contract defaults in our chickpea market, which has spoiled it quite a lot and made a lot of issues between Australia and India, Australian exporters with cargo heading into India. So I did want to mention that. It's something I feel in the last 2 days hasn't been brought up enough. We've had, in my opinion, most chickpea traders I've spoken to who export from Australia have had cargo defaulted on in one form or another. Maybe that's 5 boxes, maybe it's 10, maybe it's hundreds of containers that have ended up at the port with no buyers because the buyer has just decided that, one, he's out of the money, he bought at a high price, and now the market is much lower, and two, now he has to pay, if it was shipped later, he now has to pay a tariff to the government, and it's pushed them over the edge, and they have walked away from contracts and have not performed. So this has created a very bad situation that I've never seen before. Obviously, there's a lot of exporters who are losing a lot of money, and there'll be a lot of mistrust now and lost trust between buyers in India and exporters from Australia. Hopefully, this can change, and we can do something to get that trust back. Maybe we need to change our payment terms, or we need to do something. Otherwise, every time the market looks like it might fall, you'll have Australian exporters doubting whether their contracts will be honoured. And we can't always just sell into bullish markets, so buyers need to understand they can't just, the market can't always go up. You're going to lose sometimes, so you can't just pick and choose. That's not how things work, and it's not really fair for business overseas when people just walk away from high-priced contracts which they paid for and should honour. But anyway, we can talk about this during the panel. One of the things we are going to do is we're going to look at maybe changing our payment terms to prepayment. So for buyers we don't know or people we don't have a long relationship with, we'll be looking for prepayment before we actually ship any cargo, which is something that was touched upon in a previous session. Also in Australia, there'll be a group of exporters who've got together and a company has been formed called TradeTech, and that will allow exporters to get together and to release information about importers and other buyers who have done the right thing or done the wrong thing, and that'll become a trade reference forum for everyone who subscribes to look into and find out about the person they're dealing with and if there's any issues with that buyer that they should know about before going ahead with doing any more business to that particular person. And that'll be spread worldwide, so I'm not just focused on India there. So that's enough from me. That just gives you a bit of background on what's happened up to this point in our chickpea market. Now I'd like to turn it over to Mr. Gaurav, who's got some information about Indian market. So if I can invite Mr. Gaurav to come up and he'll present his slides.
Thanks, Mr. William. Good afternoon and a very warm welcome to one and all. I'm overwhelmed to be part of this podium, and I'm immensely thankful to IPGA for giving me this opportunity. To start with some flashback, production for 2016-17 crop year estimated at 58 lakh MTs. I'm talking about only Desi chana, recovered to normal level after two back-to-back drought sessions. Prices have collapsed from the records of 13,000 per quintal seen during second last year. All compared to other pulses, chana prices were much higher. Up to January 2018, it was somewhere around upper than MSP level. Demonetization and GST affected seasonally move in prices during 2016 and 17. Government also imposed very high import duty of 40%, and effective duty is 44%. Government has allowed export of pulses, which was banned in 2006. If we come to acreage, overall acreage is increased by 8% year on year. We have seen that Madhya Pradesh is 10% above. Then last year, Maharashtra is 6% above, while Rajasthan is 5% down. Karnataka and Andhra, both states have recovered a lot. There was drought-like situation for last 2 to 3 years, and the crop was very much down for last 2 to 3 years. There is some mistake in percentage in Gujarat. It is 7.4% up. UP 13% down due to low availability of water. Overall, if we look at the figures, 107.6 lakh hectares is the area for chickpeas. So total area is up by 8%. The main reason for growing area is the realization of chickpeas was far better than other pulses and other products. Year on year, it is 10% increase in area in MP, which we have just talked about it. If we look at total production numbers, MP is the largest producer of chickpeas in India, 28 lakh MT. Maharashtra 13, Rajasthan 9, Karnataka 6.9. Total number is 75, which includes Kabuli 2. Kabuli, I have deducted 7 lakh MT. However, the total Kabuli crop should be somewhere around 9 to 10 lakh MT. But 2 to 3 lakh MT Kabuli would be used in basin purpose, in domestic purpose. So I have not mentioned in this figure. So if we observe everything based on ground survey, production is expected to increase by 14% to 68 lakh MT compared to last year. Due to some unseasonal rain in last few days, 10 to 15th February, as we have seen, many of area from Maharashtra and MP have affected. However, there is not much damage in quantity. There are some losses only some pockets, and which is only to some quality only. If we look at supply and demand, beginning stock for this year is 5 lakh MT. It is second highest carryover stock after 10 years, I think. It was 10 lakh MT in 2008. Total production is 68 lakh MT. In spite of a good carryover stock and a good crop in India, I still expect import from other countries. The reason would be that the demand would increase by 15 to 20%, as government has banned restricted some pulses like pigeon pea, black map, lentils, and imposed some duty to to some extent, like 40% to 50%, 30 to 50%. I still doubt that the other pulses will come in a low quantity. We had imported 6.8 million MTs in last years. Till now, we have imported 3.8 or 3.9, somewhere around million tons. And I doubt that the more quantity, especially of yellow peas. Yellow peas will not be imported in good quantity. So the total demand will shifted to Indian crops. So in spite of having a good carryover stock and good crop this year, we may need some import. So total availability we have after sowing is 70 lakh MT. So I expect 66 lakh MT consumption compared to last year of 58 lakh MT. I expect about 1 to 1.5 lakh MT exports. Indian government has just opened export. We all welcome these steps taken by government. There are very few countries left, as Mr. Chandrasekhar just told before, that we have to create our brand. And it will take time, but the Indian quality and all these things will help us. Our productivity will increase as government is taking too much efforts. So we expect our export market to increase in the coming times. However, I have shown ending stock of 3 lakh MT. Some might be thinking that we have ending stock, then why we need to import? But I think government will buy at MSP level. Government is starting to make some buffer stock. So some quantity will be at the end of the year. If we look at supply and demand, if we look at demand, our demand has been shifted to industrial use compared to consumer demand. Industrial demand is increasing at the rate of 15%, while the total average increase is 8 to 9% growth we have seen every year to year in demand, but the industrial demand is taking too much part from consumer demand. So when they are buying yellow peas, comparing besan prices or dal prices to other pulses, the next substitute for chana is yellow peas. So when the prices of yellow peas is a little bit higher and chickpeas prices compared to last year rates, it is at some reasonable rate. We expect institutional demand to shift to chickpea. I expect India has market to export is Bangladesh, UAE, Sri Lanka and Nepal. MP state has declared Bhavantar Yojana, as we all know. It is expected to start from March to May, and high selling pressure is expected in the month of March to May. Rajasthan, Gujarat and Maharashtra government is planning to buy at MSP rates. This year, NCDX has started their own, different stations for chana, as they have started Akola, Ashoknagar, Jaipur. It would be a new, as it is a new these are the new centers. It would be very much interesting to see how the dematted stocks would be there, as there are some issue at Ashoknagar. We have seen that there are some Kasari problem. So it would be interesting to see how dematted stock would be there this year. Government policy is changing continuously for last few days, months. As we all know, government is trying to support farmers and making necessary changes in their policy. All the time, whenever they will need to make change, they will make change without any prior notice. So we have to be aware that what are the government steps can come. World's production prospect, I see it would be slow down due to uncertainty in prices of pulses all over the world. If we look at price outlook, Indian Desi variety price is likely to bottom out around 37 to 3800 per quintal in Delhi. However, the prices are very much fair even these days, somewhere around 4,000. But as we all know that MP government has declared Bhavantar Yojana and the pressure may come, so it may subtract market to 2 to 300 rupees more. If we talk about higher range for the season, it would depend on monsoon and government policy. But as domestic prices of chickpeas are at very fair level, one should trade in the commodity like chickpeas and they may have a good return. Thank you.
Thanks, Gaurav. That's a very informative report on India. Now we're just going to throw a few questions around the panel and see what these guys have got to say. My first question goes to Mr. Pradeep. Pradeep, do you think India will import, judging by the crop being 6.8 million tons this year, do you think they'll have to import more desis from, say, Australia or coming to the end of the year?
Hello, good evening, friends. I do agree with Mr. Gaurav that the production would be around this year 6.8 billion, and but I do not agree with the Kabli chickpeas is 700,000 ton. It should be around 1.1 million and more than 1 million ton. Simply, Mr. Sadai he told in his that the Kabli is more than around 500,000 ton only in NP. So if we add Andhra Pradesh, Karnataka and Maharashtra, it would be more than 1 million ton. To my mind, it should be around 1 million to 1.5 million ton. That is only a point, only is contradictory between us. Now, as far as India imports, there are a lot of factors to be considered before giving any opinion about the import of chickpeas into India. Every day the new policy is coming. Initially, the import duty, it was imposed 33%, including taxes. Later on, it increased to 44%. Now we are getting news that it might be either 100% under WTO, India can do, or maybe for a year, all import of pulses will be banned. So, if we consider as of now, the demand definitely will increase by 25-30% because last year the yellow peas came 2.4 million ton. This year so far only 700,000 ton has come. So there is a short of import of 1.7 million ton of yellow peas. So far Australia chickpeas came 400,000 ton against last year 1.1 million ton. So shortfall of 700,000 ton of chickpeas. Total 2.1 million ton and 400,000 ton for green mung beans, pigeon peas and black magpies. So total shortfall in import is around 2.5 million ton. Now, this demand, especially for yellow peas and desi chickpeas, will be divert to only our Indian chickpeas. So demand significantly will increase in the domestic market. The government predicted it is 110 million ton production this year. This is only government estimated, but in fact, second estimates comes, third estimates comes. So on ground reality, I don't think, including Kabli, it would be 7.8 million ton. And demand will be high even though I'm very optimistic, even though if, as of now, if we consider 44% duty, India might be in a position to buy somewhere around 400 and 450 level. India can buy at this level, and there would be a demand in new crop in October, November. This is what I think.
Thanks, Pradeep. Thanks. Now I want to ask Peter Wilson. As I discussed, I think the crop in Australia was about 900,000 tonnes, and we probably got rid of more than half of it already. But now with India out of the picture for the moment, how much do you think is left, and where's it going to go?
Is this working? Well, I think the chickpea market is probably almost a reflection of this room. There's a lot of people down the back. There's not as many up the front. So I think the buyers are up the front, the sellers are down the back, and there's an enormous gap between the two. It's no man's land. And that's probably where we are in the Desi market today. I'm probably not as optimistic in terms of the crop we've just taken off. It is difficult to really understand just what was harvested, but my ideas are probably lower, maybe 50 or 100,000 tonnes lower. We think by the end of February, with the demand we've seen in Pakistan and Bangladesh, we could have actually cleared in excess of 600,000, including rough numbers for seed, which probably leaves us maybe 200, 250,000 left somewhere between Dubbo in central New South Wales through to Mount McLaren in the northern part of the Central Highlands and Queensland. That's an enormous area, and there's a lot of farmers. So, you know, there's not a lot of grain readily available to the market today. Some of that is actually downgraded due to weather, which means that it may not actually come to the market in the short term. So I don't think there's a lot left. And but Pakistan and Bangladesh and other outside markets, Iran, Jebel Ali, some of these other markets are probably going to account for it.
Yeah, and we're hearing that the weather in Pakistan is not so good, so maybe they'll need to import more in the coming months.
Yeah, we're certainly hearing those reports as well.
My next question for you two. If prices in India drop further on Desi chickpeas, do you think that'll increase consumption domestically? Do you think people will buy more Desis, consume more Desis in India? With the drop in prices in Desi chickpeas, do you think the Indian people will consume more? Do you think demand will increase with the lower price?
Yeah, I think demand would increase, and I think there would be no option to buy other than cheaper products. And nowadays, all the pulses are at cheaper level. The demand is expected to increase by 8 to 10% additionally. The growth rate is somewhere around 7 to 8%. So we expect a high increase percentage in coming year.
Okay, thanks. And Pradeep, a question for you. Like I discussed, we've had issues with Indian buyers not performing on high-priced contracts, and we feel that a way to get around that is to ask for a prepayment before we ship. Do you think that will work with some Indian buyers? Do you think that's something that can happen, or do you think that's a bad idea?
Really, it depends on the credibility of the buyer and seller as well. So, like Mr. Kapoor told yesterday from ETG, that buy from us, we guarantee for the payment, we guarantee for the quality, we guarantee for the timely shipment. So now, India allowed its import in 1976 and it picked up in 1982. Now this is the year only where everyone should be very particular about to whom they are selling, to from whom we are buying. So as far as India is concerned, you should be very particular to whom you are going to trade. If you are in a comfortable position, then do a CD. Otherwise, ask for advances, whatever, 5%, 10%, 100%.
Yeah, I guess we'll deal with it that if we don't know who they are, we don't have a relationship, we'll ask for a deposit, and if they don't pay it, we won't do any business. And the people we do business with in a good way will continue with no deposit. Will probably be how it goes. Peter, did you want to have any comment on that?
I think there's been plenty said. I mean, there's no question that the import duties put extra stress on importers, but the importers are all aware that they're responsible for their country's import duties, but many have just simply put their hands up and defaulted without any remorse at all, no effort really put in. This probably represents an opportunity to drive a lot of discipline through this trade and probably our own. But those buyers, and we know that many people around the world, and certainly including India, actually trade, they have no money. They have no money, so they put the trade on in the hope that the market rallies so that they can actually take the goods, pay for them, cash them, and then take their profit. So all going well in a bull market, that works swimmingly. My mother could probably trade that. But what we've seen and what we've seen the last 5 or 10 years is more and more buyers who literally don't have cash. It's a pure speculative play that comes unstuck when the market goes the other way. So I think the time for that is done. I think if you look at what Modi and the government are trying to do, whilst they've been inconsistent in some of the reasons they've given, there's no doubt there's been significant consistency in what they're attempting to do. They're trying to remove or eliminate the black money. They're trying to remove or reduce the level of speculative play across a whole range of market sectors, and they're trying to remove the corruption from a whole range of industry sectors. So maybe at the end of this, we end up with really sound buyers represented by really sound brokers, supplied by very, very sound suppliers. I think that's where this is an opportunity, this is a watershed moment for this trade to take us forward.
Thanks, Peter. Quite agree with that. This is for Pradeep and Gaurav. Can you explain to me Bhavanta Yojana and what commodities does it apply to, and in which states is it being applied?
Actually, this Bhavantar Yojana is a scheme introduced by only one state called Madhya Pradesh, MP. Out of total 23 states, under Bhavantar Yojana is a price difference mechanism. Suppose a Indian farmer, they sell their own products at a below price of MSP. MSP is 44,000 rupees a ton, including 2,000 rupees a bonus. So suppose if they sell lower than the MSP prices, he can claim from the states. And this differences of under Bhavantar Yojana is calculated on the prices differences of Rajasthan state as well as Maharashtra state. So far we think it should not be more than around 5,000 rupees a ton, on and about. So because of this, the market are depressed. The people, they think the market will go down. To the what level it will go down. So everybody, every stockist, they are preparing the mind when to enter. Now the time has come to enter, and people, I think from last week they started. This is the lowest this is the lowest level prevailing in Delhi, 40,000 rupees a ton. So the stockist has started. This is the lowest. And one more thing, this Bhavantar Yojana, the registration started from February 12 to March 12. And this will make a pressure maximum by March or April. But we are very bullish from May onwards, the prices will go up.
Okay, thanks, Pradeep. Just a quick question for Peter, because I didn't discuss it in my particular talk, is what does he see the potential for the Australian new crop, which will be planted May, June?
Well, I think that really right now it's all about, there's definitely some negative, there is a negative pall cast over the origin countries such as Australia and Canada and the US. And of course we heard yesterday from the Kenyan governor, who couldn't have put it better, where she said that India came to East Africa, begged for production and then shut the door firmly on them. So that has put a lot of negativity on the supply side. We see Australian farmers are looking to reduce area sown to Desi chickpeas and other crops as well, based on market-based outcomes and lower prices. But today, the issue is that we don't have enough rain. It's very dry in the key Desi chickpea growing areas, and at this point, we do not have enough moisture in the profile, and we've seen how important that is with the current crop here in North India. The monsoon was quite good. It put a lot of moisture in the soil, and it's delivering a crop. In Australia, as it stands today, we have no moisture. And so that does not change in the next probably 8 to 10 weeks, then I think we will barely have enough Desi chickpeas to sustain our more reliable and regular markets into to 2019 would be my opinion.
Thanks, Peter. Well, we're coming to the end of our panel. We're running out of time, so I'd like to throw it open to... oh, sorry, Gaurav, you want to add a comment?
I have a question for you. As dependency of Australian Desi chickpea export is mainly on India, 60 to 75% of your export is dependent on Indian buying. So now as Indian government is imposed somewhere around duty of 44%, how do you see your next crop? How do you see you will planting intention, I mean?
Yeah, it's a good question, and I can't really answer it at the moment. We have to wait and see. I'm expecting lower. We need prices to go lower, and we need crops to be smaller. So I think we'll see the smaller crop in Australia for sure this coming year. We're not going to have 1.2, 2.4 million ton crops anymore. That game is done, I think now. So we're going to see smaller crops in Australia, and the price will work itself out. But it's got to be a price that works maybe into India. Again, depending on the tariff, we don't know. There's so much stuff that we don't know quite yet. It's very hard to say. But I think our crop has to get smaller now. The same with lentils. It's the same thing happening where the bubble has burst. Production was too big. Same with chickpeas. Production got too big. The prices were too high, and now that's all finished. So it has to start again somewhere. But I don't know where.
Yeah. And what is your costing? Can you explain, please? Yes, you have a very good yield compared to India. Can you explain me what are the expenses? What is the cost of farmers? What is the cost of your growers?
That's a question for Peter.
Well, Australian farmers are actually very efficient. Their yield outcome, on average, 5-year average, would be about 1.6 tonnes per hectare, which you can see is probably almost double that of the Indian farmer. So the Australian farmer is very, very efficient, but it's intensive agriculture. It's expensive to plant a crop. It's really a question of how much inputs they put in, whether it's chemical, seed, fertiliser and all the rest of it. But they're not going to be making a lot of money planting Desi chickpeas at current prices, because if they plant wheat, they probably don't make as much money, but their gross margin is probably better today. So they'll plant wheat or canola or anything else they can, because a lot of the thing that drives area grown or area sown is confidence. And today, the Indian government, and indeed the trade, because the trade's had a hand in destroying the credibility of the market, the fact that there is a lower level of confidence today is not encouraging Australian farmers or Canadian farmers or American farmers or East African farmers to plant crops to potentially get screwed by countries like India.
Thank you, Peter.
Thanks. Have we got time for a couple of questions, or do we have to...
Yeah, I have only small question.
Okay.
Be back.
Numerous of series is going on during this conclave in IPGA. So we are on this panel. So I would personally, this might be a personal question. What is the experience you got from this conclave about the market? Your personal. What
my experience is
before coming here. Now, after coming here and to know about the government and everything, the price tendency and buyers' credibility, sellers' credibility, and everything. So, what is your conclusion to finish off this?
I've learned to. I got a bit complacent with pulses. We got complacent. I got into, relaxed mode of price is good and lots of volume. And this year, this has taught me not to be complacent, not to take anything for granted, and to expect the unexpected. Peter, have you got any?
I really enjoyed the sambar and dosa and all the food.
You have studied India very well, I can say, because as you asked what is Bhavantar Yojana, so we all must learn that this deep study is needed to do any trade. Thank you.
Thanks very much. I think we've got time for a couple of questions, if anyone's got one. Sure.
My name is Chandrasekhar.
Yep. Yeah, we know you.
Thank you. I felt sad and sorry hearing William make that presentation about default by India. It's absolutely embarrassing. As an Indian, I think I owe you an apology. It means nothing. I know it means nothing, but yet let me apologize for what has happened. Be that as it may, over the last few months, I have argued, written in my columns, advised the government of India that this trade needs regulation. This trade needs to be regulated. It can't anymore continue unfettered and unregulated. It needs regulation. And I'm convinced some thought is within government circles how best to regulate this trade, both import trade and export trade. This is number one. Number two, when I say regulate the trade, for example, registration of contracts, both import contracts and export contracts, so that you would know who the seller is, who the buyer is, and if whether or not there is a default. Therefore, this trade needs regulation. Number two, I want to ask you, how many defaults have gone into arbitration? Or how many complaints have been lodged with either the government of India or any of the arbitration bodies or with the trade association? What are the sellers doing? Why are they kept quiet? And why are they suffering this default? Why are they not acting? Why are they not taking action? I'm not aware of any action, and therefore I'm asking you. Thank you.
Yeah, I think this year, from my what I've asked around, is that I think there'll be quite a few GAFTA arbitrations this year, I think.
Chandrasekhar, I think part of the issue, quite frankly, is as part of the process in getting containers that have been defaulted off the docks, and of course, as soon as containers stop moving, the till keeps ticking over. The shipping line, the port costs, and all the rest of it escalates astronomically. So, unfortunately, the first part of the deal is to get those containers off the docks. And in India, as in other countries, there is this requirement to provide an NOC, or Notice of No Objection Certificate, which is really just a great way for a criminal buyer, I'll say it again, a criminal buyer, to bend the seller over, because the seller must agree not to pursue. Now, then it becomes a question of whether you can prove duress. Well, of course it's duress, but you've provided a document, maybe a new invoice, a document that says, we will not pursue, like the Canadian Mounties. And therefore, they provide the NOC. They've got a document that said you won't pursue. We've taken our hit. We've mitigated costs with the shipping line and the port, and we've moved on. Then, so to pursue further, it's just good money after bad, because the buyer has a document that says, oh, but William said he wouldn't pursue me. I trusted William. He's a nice man. But now I find he told me a lie. And this is what we're up against, quite frankly.
And also one other point, just with our shipment terms, is that we talk about trust. If we sell CAD terms at site or whatever, once that ship sails, we have no recourse. It's up to the buyer. We trust the buyer that he is going to take the documents and clear the cargo and pay the correct price. If he doesn't, well, as Peter says, we can be held to ransom. So that has to change. We can't keep doing that, in this current situation where the markets are bearish, whatever, then, people are losing money. But why should their loss become our loss? It's not how it works. When the market, if we ship in a bullish market and the market goes up $200, you don't hear us, we never ring the buyer and say, oh, I'm sorry, I'll need another $50 a ton before I'm going to ship that, because I could have made more money. It's the same thing, just the other way around. So, it needs to be from both sides. So it needs some work. Thanks. Any more questions?
One more, Will.
I would like to add Mr. Chandrasekhar.
So I'll give you the mic, so 1 second.
About possible ban on import, etc. Please treat all this as rumor. I don't find any credibility in a number of WhatsApp messages that are going around. Probably someone is trying to talk the market up or down. And therefore, I think this obviously spreads like wildfire. But these are at best rumors at this point of time. Thank you very much.
Okay, thanks.
Mr. Chandrasekhar ji.
Thanks, Will. Todd Lees with team.
This is the only things we told this information is going on in the market, and whatever we discuss, I think I told that we discuss based on today's present duty of 44%, including 10% taxes. Now, as far as the contract registration is concerned, we have only two ways. Either registered with the government. If you go for the government, if we go legally, no government can be a part of arbitrator. Ultimately, the contract is subject to GAFTA. Second, if we go to any private organization, to go for the approach to the government, make it mandatory to register the contract with the association, then all the secrets will be cannot be hidden. It's a confidential data to whom we are buying, who is buying. So as far as this is pulses market, no one is very much perfect, no one is very much professionals. At the end of the day, I think a businessman is good who accept his mistakes, to whom I have done business, I should not. So next time he should be more careful when he sells, or as a buyer we should be very much concerned from whom to buy. As far as this default is concerned, personally, I heard the default is going on, but when suddenly there is a huge hike in the import duty, definitely it brings litigation too. So the fine tuning is, let us buyer or seller sit together and just for once settle the issue either amicably or legally. So this is between the buyer and seller. But as far as I am concerned, my final view is look for a good buyer, look for a good seller. And the time, I am telling you, after a spell of 3 decades, the time has come. Don't go for volume, go for reputed buyer and seller. This is my final words. Thank you.
Thanks. Todd, you had a question?
Thanks, Will. Quick one. Todd Lees, Latima Brokerage Australia. Thanks, gentlemen, for a entertaining panel session. Given it India looks like is going to be out of the market for a significant amount of time, and in the interest of ending on a more optimistic, brighter note, what do you see as the opportunities for Desi chickpeas in the next 12 months?
First up, I think, well, we can look to other destinations. So I think Bangladesh haven't imported much yet, and they need more Ramadan demand, which should be coming up soon. The only barrier to that is our quality. Like I said, with that late rain, we've got some mixed quality, we've got some good stuff, but overall the colour isn't quite what Bangladesh are requiring. Does that mean they won't buy it? I don't know. If they need the tons, if they need volume, there's not many other places they can get it right now. So yeah, maybe they'll buy some. And then we've got Pakistan again, whose weather, we have mixed reports on their crop. They need 700,000 tons of Desis for their domestic consumption. If their crop is only 100,000 or 200,000 tons, well, they're going to need a fair old chunk. And again, there's nowhere else they can get it from. They're not going to be buying from India. They'll need it from Australia. So that's my one, that's the one glowing light in the distance, maybe for Desi chickpeas out of Australia.
And Todd, as you know, we've been making beer out of lentils in Australia, so hopefully we can make some beer out of Desi chickpeas as well.
And a very good drop it was too, Pete.